The June Fed meeting is complete, but what a dud that it was. The rate decision has been made, the new dot plot has been released, and Jerome Powell dropped his 2 cents on the markets. Find out what happened in this meeting and what it means for the next few months in the markets in today's video. Check it out. Happy summer, everyone. Jeremy Hritz here. Courage pays better than fear trading. First of all, I want to thank you guys for joining me for the Jerome Powell live stream that I did the other day. It was great to just talk with other traders and investors while Powell was speaking. And when that was going on, I was taking a boatload of notes that I'm going to share with you today just to wrap up what happened in that meeting and really to put it in perspective. It was a big, fat, nothing burger. And that was the complete opposite of what I expected. I expected there to be a huge volatile move, but we didn't get that. The SPX closed down slightly on the day. And earlier in the day, things had ran higher, but following Jerome Powell's speech, we didn't get much movement at all. What was said in the meeting? I'm going to share that here with you today. And let's just start with the rate decision. There was none. Rates remain unchanged, and that's what the market was pricing in. They didn't foresee any type of cut in this meeting, and they are not expecting the first cut until September of this year, and then they see a second cut happening in December. So you could find that on the CME watch tool, and I've referenced that here on the show a few times. So no rate cuts. And what Powell said was that the Fed is going to be data dependent. They're going to wait until the data is clear in saying that rate cuts are needed. But because the economy is strong right now, based on all the indicators that Powell and the other Fed members are seeing, they don't feel that it would be an appropriate response to cut. So that was the rate decision. The second piece is the dot plot. And the dot plot still forecasts 2 cuts this year, 2025, 2 quarter-point basis cuts. But what was unique about the dot plot this time is that you had 7 voting members who said that they don't see any cuts this year. And that was an increase by 3 voting members over the last time the dot plot came out in March. And so that added a little bit of fragility into the markets. That doesn't show as much confidence in terms of where things are with the economy, and we'll get into why that is. But what is being discussed right now, and you'll hear economists and market analysts discussing this, is the Fed waiting too long to cut rates? And what I mean by that is, are they going to wait until something breaks in the system to where the unemployment rate spikes and people are losing their jobs, or the economy slows down to the point where it's too late to stimulate it through rate cuts? And so some people are concerned about that, but the other side of that is if you cut too soon, you risk increasing inflation and putting pressure on the consumer. And the reason why Powell said in his press conference that they are not ready to cut is because of, and you know what I'm going to say, tariffs. And while he did not say uncertainty 132 times this time like he did back in March, he did still say that there was some uncertainty, though not as much, in the markets, but they have a better handle on what the impact from tariffs will be. And one of the things that they do see coming is an uptick in inflation to 3% as a result of the tariffs. And Powell talked about how that increase in prices from the tariffs has to be passed on to businesses, which then has to be passed on to the consumer, and then it's going to have to work through the system. And we haven't seen that yet, so he anticipates that coming this summer. And because of that, he does not want to cut rates too soon to where if inflation gets out of control. So that was really the big point that he made. But here are some of the other key points that Powell made that I wanted to summarize. And let's first talk about the economy. He said that the economy was in good shape. He referenced a strong labor market, that he doesn't see a lot of weakness there, that inflation is coming down. And so you would think that because of that positive data, that rate cuts would be on the table, but they're not. And that's because of tariffs. And so the verdict here on that statement from Powell, in my perspective, is dovish. And that the only thing that is making this hawkish is the lingering uncertainty of tariffs. And then the most important thing that probably came out of this meeting is the clear clash between President Donald Trump and Fed Chair Jerome Powell. Because Powell went on record in saying in his press conference yesterday that if it wasn't for tariffs, the Fed would be cutting rates. So essentially, if you read between the lines here, and we know that Trump has criticized Powell several times, it's Powell's way of saying, hey, if you really wanted rate cuts, you'd get rid of these tariffs. And so expect the tension between Powell and Trump to escalate over the next few months, because Powell was pretty direct in saying that tariffs are the thing that is holding up rate cuts. And in fact, if tariffs were not in place, they would be cutting rates. And again, from my perspective, when I look at that, that is dovish. Because what Powell's essentially saying is, yeah, we could cut rates, but there's this thing out there known as tariffs. And so it's going to be a matter of who blinks first. Do we see a reduction in tariffs from the administration? Do we see even more easing or backing off after Trump hears what Powell had to say? Now, probably not, right? Because this is a battle of two strong-willed people. But to me, it shows that the Fed wants to make cuts, but it's just this one thing hanging out there that's preventing them from doing so. And that thing, tariffs, are self-imposed. It's not something that is naturally occurring within the economy. All right? And then there was this other comment, and he actually said this a few times. And he said that the members of the Fed don't hold true conviction on the rate cut path or the dot plot. Basically saying that, yeah, we put this dot plot out every so often about our rate cut projections, but we really don't believe in it, or we really don't even buy it ourselves, which to me doesn't make a lot of sense. And the reason why, and this is understandable, he's saying that the Fed is data dependent, which means that as new data comes in, they will react appropriately and responsibly based on that data, and that things could change. So if the unemployment rate would spike or an inflation would keep coming down, then they could cut. So basically, it's his way of saying that the Fed can pivot at any time that they want. And he mentioned that several times too, that the Fed is in a good position that if they need to respond with policy adjustments, they're able to do so. But why even put out the dot plot if it's something that you don't even believe in as the Fed chair? Doesn't make sense to me. And the last thing that really jumped out to me, and again, we heard him say uncertainty 132 times in March. We didn't hear, I started counting that for a period of time, then I stopped. But he did say that uncertainty peaked in April and has since come down. So if you think about the concept and definition of a peak, that's when something is at its highest, when it can't get any more intense. And he then went on to say that the Fed has a better understanding of tariffs, though not 100%, and that they're able to factor in what that impact will be on inflation. And that's why they said that it's more than likely going to increase to 3%. In my opinion, that as well is dovish, because it's saying that, hey, we've seen the worst of the uncertainty from these tariffs, and what we expect now is that uncertainty to decrease. Sure, we're going to have an uptick in inflation, but it should be transitory, and then things will level out. So, sure, the decision to hold rates steady. Sure, the dot plot had a few more voting members say that they would not cut rates in 2025. But Powell saying that the economy is in good shape. Powell saying that it's tariffs that is keeping him from cutting rates, and that otherwise they would be cutting them. The fact that he has said that uncertainty has peaked, in his words, tells me that he is dovish. But the majority of analysts who talked about this presser said that he was hawkish. And I would say that I interpret his comments as neutral to dovish. And the hawkish components are, yes, you have fewer voting members saying that there will be a rate cut in 2025. You didn't have a rate cut. He's still bearish on tariffs. But overall, if you really get into his comments, you can see that the Fed feels like they could be in a position to cut because inflation has come down substantially, but it's just the tariffs that's in their way. And so, think about this. Donald Trump and the administration desperately want rate cuts. Jerome Powell basically said straightforward, rate cuts are an option if these tariffs are taken care of. So now we get to see what happens in between now and the next Fed meeting, which will occur in July, which the market makers are not pricing in a rate cut at that time, but we'll get to see what is discussed in terms of policy, if there's any adjustment. But for now, it looks like September will be the next cut. So this is essentially part 4 in this Fed meeting series that I did for the month of June, and all this buildup that I did, making sure you were prepared, talking about the potential impacts of a rate cut, the impact of changes in the dot plot, the impact of the Powell pressure on the markets, and none of that happened. I was surprised to see things as flat as they were, but the market will do what it wants to do. It's irrational, but I do think we get the big move coming this Friday with quad witching day. So what is your take on Powell's comments? And what I really want to know down below is, do you think that it is actually tariffs that is keeping the Fed from cutting? Or is it their concern about inflation that is beyond the tariffs, that there's more inflationary pressures out there that maybe we are unaware of? Let me know down in the comments. Smash that subscribe button, and thank you for all of your support of Courage Pays Better Than Fear Trading, and I'll see you back here on the next video. Make it a great day, everyone.